Hey, welcome to the Mortgage Minute. It's been a while since we've done a Mortgage Minute, and honestly, there's so much been going on in the mortgage and real estate market. This could be the Mortgage Hour. So I'm going to break it down to just two simple articles that caught my eye, and I'm going to tell you, it caught my eye because it made me furious. And I would even go so far as to suggest irresponsible reporting. So the first one is, of course, we've all know that there's been mortgage rule changes that have come out of Ottawa. We also know there's a lot of talk about the overheated Canadian housing market and the potential for a crash. So what happens is the media starts to over-report things, in my opinion. This article really struck me as being irresponsible. You'll find out why. It says CMHC faces $1 billion risk from sharp rate hike. A $1 billion risk from a sharp rate hike. So what that would tell you, if I'm just a casual newspaper reader, and I look at that and I say, well, what does that mean? That means, oh my God, the Canadian Mortgage and Housing Corporation, which is a crown corporation which is backed by the Canadian taxpayers, in other words, if they lose $1 billion, that's the taxpayers that are on the hook. My God, the government should do something about this, because we as taxpayers, if I read this article, I'm thinking we as taxpayers are exposed to $1 billion risk because of irresponsible lending and this out-of-control housing market. So let's look at what it really says. It says a sudden sharp rise in interest rates could cause Canadian house prices to plunge by 30%, which would trigger a $1 billion loss. Now, let's read further. What it really says is that CMHC actually went through an internal modeling that showed how vulnerable it was to a series of severe economic shocks. In other words, what they were doing is doing stress testing to see if the worst case scenario, if Armageddon took place, how would that impact us? So pay attention to this, because that's not what the headline was suggesting. The headline suggested that this is potentially possible. If you read further, it says, given if we were searching out extreme scenarios that have a very remote chance of happening and planning for them. So that's what they were doing. They said, well, let's take a look at some extreme scenarios. And then it goes on to say, this is not a forecast, but a test to see how the taxpayer-backed institution would be able to withstand a series of doomsday-style economic surprises. And what they came up with is if interest rates were to double by and increase by 2.4%, which in itself is almost absurd, and then in addition to that, unemployment were to increase by up to 11.3%, then the insurer would stand to potentially lose $1 billion. However, the article goes on, and here's the best part. At the end it says, the agency then said the base case scenario, in other words, what they actually do believe would happen, the most realistic economic projections used to set up, that they use to establish their capital levels, is for unemployment to peak at 6.6% and for house prices to rise by 9% over the next 5 years, in which case CMHC mortgage insurance business would generate more than $6.4 billion of profit. Okay, that's the very last sentence here in the article. The very last sentence. Oh, by the way, we actually project a $6.4 billion profit. But if doomsday happens, we could lose $1 billion. So to me, that's irresponsible reporting. But it was really, really important. In other news, Janet Yellen is looking to increase rates in the United States. The Fed rate will go up. I'm expecting that in around Christmas. The question is, how does that impact Canada? And what does it mean to us? So as we look at all this, we do see the mortgage rule changes that happen here in Canada will have an impact on Canadian mortgage rates. Some of the banks have already increased their rates. So I'm expecting, basically, I'm not going to get into the minutia, but with the new mortgage rule changes, what's happening is Ottawa's trying to figure out ways of cooling down the house prices. Ottawa can only control CMHC. Remember that. So when the government makes rule changes, it impacts CMHC. What they're finding is that they've had this big round of rule changes, but really nothing's changed. So the next thing, now they're sitting there going, what else can we do? Well, the head of CMHC has indicated that the next thing they should look at is minimum down payment. So if you're a first-time home buyer, you might have to look at 10% down in the new year. Now, I'm not saying that's coming out in January, but that is the next thing to look for when you're looking at what Ottawa may or may not do. And at the end of the day, there's another article here. That's actually a continuation of the same thing. CMHC analyzing their options. And at the end of the day, Benjamin Tall in here makes a good point. He says, government, it's time for you to back off. You've come in both at the civic level, the federal level, the provincial level, and at all these different levels, government has been putting their fingers in the pie, trying to manipulate or change or cool down the perceived problem of the Canadian housing market crisis. Right now, what we're going to see is the time for the government to step back, take the foot off the gas pedal, and see what the results of the meddling will do and how that plays out. My prediction is in the Vancouver market that we're now in November, that will fall into the December, January, February market, at which time will coincide with the normal market will take time off because it's Christmas and the holidays and all that. So you're going to see a further softening in the marketplace here locally, but demand hasn't changed. I anticipate that this will all revert back to normal in the spring market. Demand will take over. The economics of supply and demand will take over effectively. And my expectation is we're going to see a resurgence in our local market here in Vancouver. That might not happen everywhere, but there will be a resurgence across Canada, or sorry, in Vancouver, in the spring market. So ladies and gentlemen, there you go. That's the Mortgage Minute for this week. And last but not least, I've had a few people ask me about the change we made in partnership with David Concalves with the Mortgage Alliance team. David and I partnered up to work with real estate investors across Canada. If you get a copy of the Rain Life magazine, there's a great 2-page article in the middle here that explains in detail. If you'd like a copy of that article, I can send that to you. And as always, that is the Mortgage Minute. If you have any questions, concerns, feel free to call or email us directly. That's the Mortgage Minute today. Hope you guys have an absolutely awesome week, day, and month. Bye for now.